Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 18th COT report of this year, and as usual we're going to start off with the changes in commercials positions. So here we go. Silver is on top of our list with a 48% change in commercials positions. Huge change size. You may see that on the chart here. It's unquestionably the largest change in the past 52 weeks range. It's of course a significant bullish COT change signal, but of course caution is definitely advised, since you may see the dynamics of this decline. It would not necessarily mean that there's a 100% chance that prices will halt here and start going higher, but of course it does say that there may be a rebound in prices. Let's jump to the 5 years chart and see how extreme this market is. You may see that we're moving away from a bearish COT extreme level. So that was a successful signal. As you may see, prices have topped over there, and then since that point they have declined. And now we are of course moving towards the neutral zone, and of course afterwards the bullish one. Of course we're very far away from those levels, still closer to this bearish extreme, which means that this decline can continue on with ease. Moving on to the Chicago wheat, we have a 38% change over there in commercial positions. Again, we're talking about huge change. I would say it's the largest one, similar to the silver market. We are talking about the largest change in the past 52 weeks. So this of course is coming after prices have declined a bit, and that means maybe the signal is a little bit late for us. Nevertheless, there's of course prices could continue their decline, but let's have a look at the COT Extreme, and you may see that we had that huge extreme, the bullish I talked about last review, and now overall we see a rally last week. Of course you may see on the chart that it's not necessarily going to be that way or continue, but nevertheless the stress level in the market is so that the chances of further price increases in the medium to long term are now definitely greater. Moving on to heating oil, here we have a 37% change in commercials positions. Again, the largest change in the past 52 weeks. Bullish COT change signal, very dynamic price movements in the market, and suggesting that in the near term, the next couple of days, prices may continue what they have done on Friday, meaning they may go higher. The extreme shows you that from early this year, the end of last year, when we had that huge bearish COT extreme, prices did go a bit lower, and now we're headed towards a bullish COT extreme. In relative terms, that means, well, for 37, 31 reports, 37 in case of commercials and 31 in large speculators, we have not reached these levels. So it's of course not that significant extreme, but shows you that it's becoming larger and larger. So maybe we would see the continuation of this decline for a couple more weeks or even a month, and while we do so, we would see a development in the stress levels of large speculators and commercials also, and of course in case of small speculators as well. And if that happens, then we would reach a level of extreme where of course prices could be at such levels that it may be interesting to analyze a possible long opportunity. Let's move on and have a look at large speculators COT extreme. We have cocoa on top of a list with an all-time extreme in large speculators, 676 report extreme in commercials. So you may see that on this 5 years chart, pretty obvious, and you may see that we had a significant extreme a few weeks, month ago, and that was it seemed to be a successful signal, but afterwards prices headed back towards south, and now we have this even greater extreme in the market. So Stress levels are all-time high, at least in large speculators, and close to all-time high in commercials. And that is a very significant and useful signal for us. And you may start searching for opportunities to go long here. Well, that's my opinion. Natural gas is our next market, with 539 reported extreme in large speculators, also in commercials. And you may see that on the chart here. So overall, you may see that we've moved away from a bullish COT extreme level, and that was in the market for many months, over a year basically, starting somewhere here in the end of 2014 and when way over 2015, and eventually maybe I'd say the beginning of 2016 it started to push prices higher, and basically this downtrend may have been broken. Now the big question is, okay, are we going to continue the rise, or are we going to go back into to decline mode? Well, the report shows us that stress levels are definitely building up towards the bearish side of the market. So large speculators have shifted, started decreasing their net short positions, and basically by now they've actually created a net long position, which you may see on the chart. The 5-year chart is very rare. So that is a significant extreme. 539 report, meaning almost 10 years. So maybe we can start thinking about exiting these long positions if we have any, or just doing our money management and decreasing these positions and starting to be prepared for a maybe lower pricer range coming. I don't know. So let's move on and have a look at platinum, with a 254 report extreme in large speculators. Here we go. There's that extreme, and you can also see where it coincides, this axis or the graph of large speculators. That's the point in time when we had such an extreme. This is of course a bullish COT extreme in the market, and looking at the chart, I think it's absolutely logical to have that, and we can expect to see higher prices coming. Of course, keep in mind these extremes can grow for many weeks. It's just indicating that stress levels have reached a significant level, and that we should be prepared for higher prices to come. Okay, that is going to be all for this review. I hope you enjoyed it, and I hope to see you next week. Have a great weekend. Take care. Goodbye.